You're listening to Let's Figure It Out by Ad Valorem, where we break down business, finance, and tax without the fluff.
From side hustles to audits, we keep it practical, insightful, and even a little bit of fun.
Let's get into it. Hello and welcome to Let's Figure It Out, an Ad Valorem Group podcast aimed at helping small businesses understand their finances. In this episode, we'll be covering off real-time data, budgeting, and key financial metrics.
This podcast is all about helping small businesses get their finances in shape. And today we're going to get some great insights from our Director of Client Services, Alex Black.
Thank you very much for having me, guys.
Alex, before we get into the nitty-gritty, tell us a little bit more about what you do.
So I do a little bit of everything at Ad Valorem. I spend about 50% of my time working with clients, typically our larger clients, delivering strategic insight into their business and helping them make the right decisions to make their business as efficient as possible. And the other 50% of my time, I focus that internally. So I look at what we do for our clients, our processes, our procedures, and what technology we're using to deliver those services. And again, focusing on efficiencies and improving client experience.
Cool. Let's figure it out.
Right, we're going to kick things off with a little bit of fun. So we're going to have a game of two truths and a lie. Yeah, that's the one. So Alex is going to tell us three statements, and we're going to listen intently and try and determine which one the lie is.
Alrighty. So budgeting isn't just about cutting costs. It also helps businesses plan investments and growth by allocating resources effectively. A business with strong cash flow can still go bankrupt if it doesn't manage its liabilities effectively. And if a business is profitable, it will always have enough cash to pay its bills on time.
Okay. We're doing.
Interesting. Yeah, on three, say. So label them A, B, and C. On three. 1, 2, 3.
C.
Nailed it.
Nailed it.
Nailed it. Every time.
Yeah, so it's some kind of interesting misnomers in there. So businesses with strong cash flow. Cash doesn't equal profit. So you can have cash via debt. You could have got quite a lot of loans out. You could have really strong cash flow, but you're not profitable. And then you're going to struggle to service that debt. And businesses can get in quite a lot of trouble through that, especially where we've got rising interest rates. So they might have got the debt at quite a low rate. They're coming to the end of a fixed period and that debt's about to get a lot more expensive. So having a good idea of what your cash is king, but focusing on your profit and ability to service that debt is really important as well. The budgeting side. So budgeting isn't just about cutting costs. It isn't just about austerity. It is about planning for your future, and see so many businesses budgeting to stay where they are, right? Budgeting on what did I spend last year and what am I going to, and that's going to give me my basis for next year. But they're not budgeting for where they want to go. They're not budgeting for their marketing. They're not budgeting for their IT. They're not looking at where do I need to take this business and how am I going to do that? So it's really important, I think, for businesses to start looking at those budgets as more of a roadmap and look forward with it. And the final one, the true one, is just because you're profitable doesn't mean you're always going to have enough cash to pay your bills. So again, we spoke about it. Cash and profit aren't necessarily the same thing, especially if you're growing your business. So if you're taking the profit you've made and reinvesting that back in, you can do what we call over trading, where effectively you're doing too much and your clients take, say, 30, 60, 90 days to pay you. So you're profitable, but you've not got the cash and your suppliers are knocking on your door to get their money within 30 days. So again, having a good budget, having a good insight into where your business is at is really important.
I think the budgeting piece is an interesting one now, with things like the government budget coming out. I think it's been made rather difficult for businesses now to operate, and I think budgeting moving forward has become ever more challenging. And I think from the clients I've been speaking to, they've actually found it more prominent for us to complete a budget on their behalf, because everyone's kind of up in the air as to where they're going to be in 12 months' time and how they're adapting to the rise in NI and things like that.
That's it. It's tricky, isn't it? You've kind of got to respond pretty quickly to government announcements and changes. So yeah.
I think one of the things that really surprised me is a lot of small businesses don't have budgets.
No.
So, I speak to quite a lot of SMEs, over my career, and the majority of them don't actually have a proper budget, or if they do, it was what happened last year. And again, that's not going to factor in things like new legislation coming in or new hires or potential changes. So a lot of small business owners just need to sit down with their accountant and put one together, because it's really important.
Do you think a lot of small businesses are struggling with that because the market is so unpredictable now? I mean, we've come out of COVID, that caused a lot of businesses to fold. We've now had updates in the budget from the government. That's caused a lot of monetary stress on businesses. Do you think it's now because businesses can't determine what is coming next and can't determine what their client bank's going to look like and how they react to changes as well? So it's more difficult to produce a budget, right?
I think it is. And I think for a lot of clients, it's that scary kind of it's a spreadsheet, right? It's lots of numbers in the future, so they're not certain and they don't necessarily know where to start. So not only do they not know what's going to happen, they don't even necessarily know where to start. So when I'm talking to a lot of businesses about how they set their budget, I'd say start as if you're going to do nothing. So take down last year's data, add 5% onto all your costs and don't change your prices, and see if you like the result you get at the end of it. Because I guarantee you won't, right? Because it's going to tell you you're going to make less money.
Yeah.
And that's kind of if you do nothing, this is probably where you're going to end up. And then decide where you actually want to be and start moving some of those numbers to get you towards where you actually want to get to.
So I guess on that, what do you say to businesses who are producing a budget? They're looking into the next financial year for them and their team, and there are anomalies that could be thrown into the pot midway through their financial year. For example, increase in insurance premiums.
Yeah, again, I think the budget's one of those things. A lot of people see it as you said it once and you leave it forever. It's got to be fluid. It's got to be agile and adapt to changes. So you might set a core budget. It's the one you start with, and it's maybe the one you measure yourself against as a baseline. But where you get these anomalies pop up, where you get surprise costs coming out, you need to rebudget, right? There's no point measuring yourself against a stick that you know is not going to work for 6 months just because that's what you set. So make changes, be agile, and your budget works for you, not the other way around.
What about budget versus target? Because it's a pretty hot debate. I mean, particularly in in the sales environment, you know, you're looking at, if we were to get given our budget as a sales target, we would probably not be that as motivated by, you know, driving growth. So how do you manage that?
Again, I think you raised a really important point there about the sales environment. So I think it's really important to understand what environment you're in,
Yeah.
who your team are, or who the budget's for, and what you're trying to get out of it. Because you've got maybe some industries that are a little bit more conservative, and if you set them a really high target, that's going to freak people out, and they're going to get really worried about it. And you've got to look at what are they going to be incentivized by, and maybe have different budgets, targets. They're the same thing effectively. They've just got a different endpoint. For the team to make sure that, you know, we need to do this to keep the lights on, and this is actually going to move us towards our ultimate goal, and here's like a massive stretch, and if we could do this, it's going to be amazing. I think understanding which one's for which person and how that's going to either motivate or demotivate them is really important.
Yeah, it's tricky when you've got multiple personalities in a business as well, because I think you want to have that joined up approach of, this is what we're working towards, but again, it's making it clear that actually this is the baseline of what we really need to do, and actually anything over and above would be a bonus effectively, and it just means we can get there quicker than what we thought. So I think that needs to be joined up, I think, from the top down. I think
it's really important, and I think you kind of hit the nail on the head there with bonus. I think budget baseline, this is what your salary's for, right? This is what I pay you to turn up and do, and if we do this, we're okay. And then stretch and target, especially say in a sales environment, is this is how you earn that bit on top. This is, you know, if we get into this region, everyone's going to get a bonus, and, you know, rising tide raises all ships, and making sure you message that to your team correctly if that's what you want to do, and then follow through on it is a really important thing.
Yeah, I think I've got a lot of respect for business owners operating in the market currently, and I think from our side, our responsibility is just to support them, and that's by giving financial clarity.
And the other side we're looking at is cash flow, right? So a lot of people budget their P&L and they won't go beyond that. And I think what you've got to look to then do is, and this is the much harder bit, is turn that into a cash flow. So some of the other stuff we're talking about there is, you know, just because you budget a profit doesn't mean you can have a great cash flow, and vice versa. Just because you have great cash flow doesn't mean you've got great profit. So cash is king, and it needs to come down to, you know, what is that budget going to turn into in terms of cash in your pocket at the end of the year?
Yeah, no, exactly. Right, so obviously talking of changes with HMRC, MTD for ITSA is something we've been hearing about for quite a while. So Alex, you want to just give a bit of a summary of where we're at, what it is, all that jazz?
Yeah, so MTD's been being talked about probably about 8 years now, and is it will it, won't it kind of situation. So we had it before, we got probably 18 months out before, and then it got postponed again. We're now sort of 12 months out, so it's coming in from April 2026, and we have to assume it's gonna happen. So any sole trader or property income greater than £50,000, and that's turnover, not profit, will have to do quarterly submissions to HMRC using MTD software as of April 2026. And that's going to drop down to £30,000 as of April 2027. So it's going to capture quite a lot of small businesses and people that have got maybe larger rental portfolios.
So what's the idea behind this? Why are they doing it? How are businesses and individuals going to be able to react? You mentioned about software. What's that looking like?
Why they're doing it, I think they're looking at trying to get greater sort of clarity on tax and effectively cut down on avoidance or errors. So I think when you look at VAT, VAT went MTD probably about 8-9 years ago now, and they saw a drastic reduction in the error rate that they were seeing because you had this real-time capture coming through software, so it made it much harder for emissions, whether genuine or by accident, being made. So from the government's perspective, the drive's towards getting more accurate information about individuals and their tax position more regularly, effectively.
So do we think that there's going to be a bit of a teething period with this where we're going to get a few issues? Do we think there's going to be an increase in the amount of individuals having to produce disclosures back to HMRC, or how's this going to plan out?
I imagine they're probably going to take it easy on us for a first period. So we've seen previously they've not necessarily got hard deadlines all the time. I think we need to prepare as if there will be one and use the right software, use it properly. But it's quarterly submissions with a roundup at the end of the year. So if there is like a small omission or an error throughout the year, you'll kind of capture it in that roundup and hopefully get it all right. But the plan for a lot of our clients is to get them onto MTD software like Xero, and then work with them to get that information in there in real time. And that's going to have benefits beyond just complying with what HMRC wants. It's going to help them run their businesses better.
So what, for the skeptics out there, what affects, who are going to be the most affected? Because I think there's going to be a big change for quite a few businesses, really, particularly maybe those businesses sort of 20-30 years in the making, more established. So what are going to be the key things that we need to look at for them?
So I think hopefully your more established businesses won't be as adversely affected by this, because if they're running their business like it's a business, they've got bookkeeping information, be it might not be digital, it's not going to be as big of a transition. I think what we've got to watch out for here are people that are not necessarily running it like it's a business. It's almost maybe it's a self-employed income for them, and they're not seeing it in that way, especially where they've maybe got high turnover but not a high profit. So one of the things you've got to watch out for is it's turnover. So you could have a £60,000 turnover but only making a £10,000 profit, and you've now got a much higher compliance burden on you. So you're gonna have to, you might have paid your accountant once a year to do a tax return, to call it, a few £100s. They're now going to have to do 5 submissions for you, or you're going to have to learn to do it yourself, and that's going to, I think, put a bit of a burden on those people that are kind of doing it a bit more lifestyle, maybe not running it like it's a real business, and they're going to have to kind of make a choice of, do I double down and really put some effort and make this a real business, or is it worth the additional burden that I've got on top of me?
And with that, what happens with the tax payments? So, I mean, currently as it stands, obviously it's fairly straightforward. You get to the end of the financial year, you complete your self-assessment, pay the taxes applicable. What happens now with tax payments?
So at the moment, nothing changes.
Okay.
I wouldn't be surprised if we see that change in the future, though, because let's be honest, if HMRC know what you owe them every quarter, then wouldn't be surprised if they start asking for it. We already do interim payments. So say the tax year runs to April, you've then got till January to file your submission, and you've got to make sure you've settled your complete liability by the end of January. But actually, a lot of taxpayers pay the first half towards the next year in January as well, and then they pay the second half in July. So most individuals have paid their full tax liability, or an estimate of it, by July, and then they only settle it in the next January. So if they do move towards more of a quarterly payment system, it's not actually going to accelerate it that much. And I kind of probably see HMRC leaning on that and going, it's not that big of a change. Just pay us every 3 months.
I think it's drawing back on what we were talking about earlier, right? It's just become a little bit more difficult to run a business and to run it efficiently. And also now to have to jump through more hoops on the compliance side. It's not necessarily promoting people to create businesses and to run them. And it seems sad.
It's definitely another challenge that's been kind of chucked up in front of them, and I don't know, optimist in me wants to see it as an opportunity, and kind of it's going to push people towards digitization, which will have benefits they won't even thought about yet, and hopefully it might help them run their businesses a little bit better. I mean, I wouldn't say that's why HMRC have done it, but I think if we look at it as an opportunity to get clients that might not have gone digital otherwise onto systems like Xero, they'll have a better handle on how their business is doing in the real time, as we were talking about earlier on. They'll have a better handle on their cash, on their profit, and it might be a sort of blessing in disguise.
I think that's one of the things that is really a benefit of the tech. Really, is the ability to see where the flaws in your business are. You know, quite a lot of businesses that we've dealt with in the past haven't had a full kind of grasp of where they're going wrong, and it's really hard not to. If you can't see what the problem is, how are you supposed to know? You kind of just, it's a kind of a finger in the wind guess, right? So um, maybe just to highlight some of the, I guess maybe just highlight some of the benefits of the tech, because I think a lot of MTDs, I see the MTD bit as a bit of a hook, is in the sense of you kind of need to you're pushing towards doing it now. You kind of have to. But actually, I think there are wider benefits of using it. So maybe let's just draw a little bit on the opportunity and the benefits. And
Yeah, so if we take an example of maybe a simple landlords, we've not spoken about landlords yet. Let's use one of those. The way I try and talk to my clients about real-time data, real-time accounting, is it's kind of like using Google Maps versus using an old school map book, right? So you know, when we get in the car now and grab like the A to Z and kind of like work out where they're going. And
my father-in-law.
Right, you got
Yeah.
like first of all, you got to find out what page the place you're going to is on.
Yeah.
I'm not sure how you do that, right?
You got to get the right map in the
Yeah,
first
you got to get the
place.
map, find the right page, then you got to work out where you are, and it's just crazy, right? And there's people out there still running their business like that. You know, they're doing their bank rec and they've got like paper bank statements and typing information in. It's crazy, right? So one of the things that it's going to do is it's going to digitize that. It's going to say, where do you want to get to? And then it's going to give you a roadmap to get there. So take a bank rec, for example, direct feed into your bank. So every single day, your bank's just going to send over your daily transactions to something like Xero. And then you just tell it what it was. And you can actually then start to teach it what it is as well. So at the moment, they might be paying a bookkeeper or doing it themselves on a Sunday, sitting down, typing in date, amount, description, and then what it is. And what's going to happen now is every day the bank's going to send it over, and then we can start saying, hey, British Gas goes to heat and light. That's my mortgage repayment. So that element of it's always going to be capital. That element's going to be interest. We set these rules up, and then they come in the morning and they go, yep, that's right. Yep, that's right. Yep, that's right. And the bookkeeping's done.
Yeah.
So it could be quite a big paradigm change for some of these people that are spending a lot of time because they've always done it that way. And this is going to unlock a completely new world for them.
Yeah, I think it can be a generational thing as well, because I think you've got, I think in terms of focusing on what it's quite hard to identify exactly what the pounds and pennies saving or whatever is going to be. And I think that's the bit that a lot of people focus on. But actually, because to me, I look at it, efficiency benefits. Okay, that's great. That sounds great, but it feels a bit fluffy. So it's like, what does that actually translate to? So I think it's quite interesting to see the stats, I guess. I mean, we've definitely seen it just in the last 10 years of being, or is it more than that now? Probably more than that. 10 years plus of being a Xero partner, platinum partner. So, yeah, what do you see kind of in terms of actual savings and physical kind of benefits?
I mean, time is money, right? Like, and I think a lot of business owners forget that their time is valuable, and they would rather spend a whole Sunday morning that they could be with their kids or out doing something, a hobby, what they might enjoy, typing numbers into a system. So it's probably not, well, it might, but it's unlikely to give you an initial pound saving, right? Pounds and pennies. It's probably going to cost you a little bit. You can have subscriptions. You might have a little bit of an upfront cost. So these things are relatively cheap these days. But what it is going to do is hopefully give you time back, and quite a lot of time compared to how much, if I said I could sell you an hour for a tenner, extra hour in a day, £10, you're probably going to take me up on it. And I think that's where how you need to start looking at these things, is not necessarily what it costs, but what does it give me?
Well, I suppose time is the only thing you can't get back, right? There's no, it's the most valuable thing you will have in life, because it's something that you can't.
It's finite.
You literally, it's finite. Whereas, you can always make more money, you can always do whatever, but you will never get back more time. So you've got to put a value on it.
Yeah, I think on the other side of that, I think for some of the people that are of the older generation that have maybe held, let's use landlords, a property portfolio for years, things like MTD coming in, I wouldn't be surprised, and things like stamp duty, etc., rising. I think a lot of people are starting to take their hands off the pulse a bit and going, you know what, I'm out. I'm tired of it. I don't want to learn about MTD. I don't want to have another responsibility on my plate. And I'm out. And I think I can see the positives of MTD. I can see the positives of having, real-time financial data and all of that. But I think it's kind of desensitizing the efforts put in by the older generation to build these portfolios, because it's become so difficult now that it's it's not as beneficial from a monetary point of view. And I think the profit margins, especially for landlords, are being scrimped down. And now if there's additional costs on things like software, things like council taxes have gone up on second homes, it's just not as attractive as what it used to be.
Yeah, I mean, they're definitely putting barriers up in front of landlords and small businesses. And I think our job as financial advisors is to try and knock some of those down, or at least kind of make it a little bit easier to get over them. And I think that's why we need to have these conversations, because it's not as big or as difficult as it might seem. And I think when you've not got all the information, or you've not got the right expertise, it looks insurmountable, it looks massive. But when you sit down with a client, you can break it down and kind of go, this is what it means. This is, this is how it's going to look. And actually, you might find it's easier. It's quicker. But at the start, it's new, it's scary, it's daunting, and we really need to have more conversations. So if you are worried about it, if you're not sure what it is, pretty much all of you are going to get letters. If you're eligible, you should be getting a letter from HMRC in April to kind of say, we think you're going to be in this.
Yeah.
If your accountant hasn't spoke to you before, then make sure you're reaching out. And if they're not helpful, find one that is. There's so many good accountants out there.
Yeah.
They can break that challenge down for you, and they can make it manageable.
Okay.
Support is key.
Yeah. The change is scary though, isn't it? I mean, at the end of the day, change for people is scary, and that's the thing that I think is probably the biggest barrier to entry as well, because it takes time, and we've seen it in our own business. It takes time and money and to implement things like that. So it's trying to make that as smooth as possible, I guess.
Yeah, and embracing change is so important, integral in business these days. I think it was my first ever ZeroCon, so probably like 9 years ago. And one of the guys on stage said, the pace of change at the moment is the fastest it's ever been and the slowest it will ever be again. Which kind of took me back a minute. I was kind of, you had to think through it and say it about 3-4 times to kind of break it down. But, we're seeing the most rapid rate of change we've ever seen before.
Yeah.
And everything that tells look at AI, look at some of the technologies that's coming out, it's not slowing down. So I think get the right people around you, get the right support and team, because change is happening.
Change is afoot. So, guys, we touched on budgets earlier on, so we won't go into too much detail on it. But why don't you just give us a bit of background on some of the software you can use, why it's important, and one of the things we can do.
No worries. Yeah, as we said kind of earlier on, budgets don't have to be this really hard, challenging thing you do on a spreadsheet anymore. There's a lot of really cool software out there that will plug directly into digital accounting software and pull a lot of the information out and do the legwork for you. So have a look round, and there's lots of them. You've got SIF, you've got Fathom, you've got Futurely, you've got quite a lot of management account reporting and budgeting softwares out there. Plug it into your QuickBooks or your Xero. It's going to pull a lot of the data out, and it'll give you a really good starting platform. It'll probably ask you how you want to budget. Do you want to start from scratch? Do you want to start from last year? Do you want to start from last year plus a little bit? And as we were saying earlier on, I think kind of start from a position of, if I do nothing, what's it going to look like? And then start to move and tweak your key performance metrics. And I think that's probably one of the best advice I can give is look at your KPIs, look at your key performance indicators, because they're easier to play with. So is your gross profit margin where you want it? Or if not, you've only got two things you can do. You can either increase your sales or you reduce your costs. And so it's easier than looking at every line individually and going, oh, what's that line going to be? Kind of look at the big things, go, how do I change them? What levers can I pull? What can I change? And just start to play around with it until it gets to where you want it.
Okay, so within your client bank then, just all the clients you've dealt with, what do you typically see as like the main kind of KPIs you tend to see?
So you got your kind of off the customers, you got your gross profit margin and EBITDA, so earnings before interest, tax, depreciation, and amortization. Kind of your two big. Most people don't even treat them as KPIs; they're just kind of things they track. Outside of that, a wise man once told me, pick your 3 biggest costs and KPI the hell out of them. And I think it's a really good advice, right? Look at the things that are driving your business. For most businesses, it's going to be people. It's going to be tech, or it's going to be purchases and products, depending on what industry they're in. Okay. So look at those. How are you using them? What's your utilization? What's your wastage rate? And try and find ways to make that work for you.
Yeah. Okay. So like to GP then, for example, gross profit. Why is that? Just tell us a little bit more about why that's important to track. You said a lot of people track it, but probably don't really use it as effectively as they should. So
that's really fair. Yeah. So why is gross profit important? It is effectively the amount you have left after delivering your service, right? So what you should be seeing with gross profit is the immediate amount of money you get from doing something. The more of it you do, you shouldn't necessarily get a larger amount. It should be pretty consistent. Not always the case, but it shows you the additionality you're going to get from every £1 that you bring in. How much is that actually going to give me in profit? And that allows you to make quite a lot of important decisions in terms of break even point. So I know I've got all of these overhead costs. They're not necessarily going to change no matter how much work I do.
Yeah.
Bit of a fallacy because most of those are kind of step fixed to some extent. So if you get big enough, you're going to need a new property, or if you know, depending on what it is. But say your fixed costs are fixed, you can then work out, if I make 50 pence on every pound I bring in, I need this much to cover my overheads, and then this much to hit the profit I need. So it's a dial mover effectively.
Okay, cool. So I mean, EBITDA, I guess, is the other one, because it's there's, I mean, even quite a few accountants don't necessarily fully understand EBITDA. So I've genuinely seen that quite a bit. So what give a bit of an overview of EBITDA, what it shows, and what you can do off the back of it. What's the important bit of it?
No worries. We had we used to have a financial director that started meetings kind of showing what is EBITDA, and not everyone knew. So earnings before interest, tax, depreciation, and amortization, effectively kind of the things it actually takes to run your business. If I stripped out all of the kind of not necessarily real costs, so depreciation, amortization aren't real, they don't exist, they're kind of a slow release of the cost of an asset to the P&L over its estimated useful life. Again, tax is fluctuating. It's not necessarily a representation of what you've done on the day-to-day, although it is quite important to track and know what it is. And interest, again, fluctuating depending on how much gearing, how many loans you've got, and what rate you're on. So you're kind of trying to strip all of those things out that don't relate directly to the operations to kind of see what is the profit. So if I was to give this to someone else and they ran it, you know, with different assets or with different loans or with, you know, in a different way, then what are they actually going to get out of it? And I think it kind of normalizes a lot of those decisions out and says, this is what I'm actually making from my day-to-day operations.
And I think that figure is really prevalent now. I think with a lot of people looking to exit their business and looking to do a sale later down the line, when we're talking to clients, we say, you know, what's your 1 year, 3 year, 5 year plan? And if at the end of 5 years it's an exit, we look at improving EBITDA, because at the end of the day, that's the offer you're going to get, a multiple on the EBITDA, hopefully, when you go to sell.
Yeah, absolutely. It's a key figure, key metric that businesses or acquirers will use to value your business. And then, you know, at the end of the day, you know, what are you doing? What are you running the business for? You know, you want to maximize your value out at the end of it. So yeah, absolutely, really important that we track EBITDA. So yeah.
We've seen it a lot, right? I mean, the old models might have been multiples of turnover.
Yeah.
I think back in the day, a lot of businesses were just trying to drive that top line up because they thought they were going to get a multiple of turnover. With more private equity and more, you know, people entering the acquisition market, especially in our industry, say in accountancy, but it's happening in a lot of other industries as well. They're driving that EBITDA because they're about profitability. They want to make sure they're getting that return on investment. Yeah, I think you should, as a business owner as well, right? It's got to be really important to you. What am I actually getting out at the end of this? Am I working really, really hard to kind of end up in the same position I was in before, or am I actually generating value?
Yeah, I think, it put simply, it is purely what is the value, what is the business doing? Like that, it gives you kind of a true representative of how well you're performing. So yeah.
But again, not all KPIs, not all key performance factors have to be financial. So again, look at those ones that are going to tell you what you're doing with your biggest asset. So, you know, I had a manufacturing client, and instead of tracking sort of people efficiencies, they looked at utilization of machine time, so machine hours. They knew how many machines they had, they know how many hours they've got in a day, and we didn't just look at business hours. So some of these machines can run on auto feeds, and what we found is they weren't utilizing any of their overnight hours. So if they set up jobs before they left, they could get, say, 5 machines doing another 4 hours worth of work in the evening when electricity is cheaper. You know, you're not paying laborers to stand around, and they really improved what they were doing with their business by looking at what are we not using.
Okay, so we've covered off quite a lot around KPIs, budgets, benefits. Give me an overarching statement, KPIs and the importance.
So KPIs are that key performance indicators. It lets you know are things going right, or are things not necessarily going right? And I think as long as you've got the right KPIs and you're hitting them, you kind of got to trust that you're going in the right direction and you're doing the right things. And vice versa, if you're not quite hitting them, you've got to look at why and what are we not doing to get to where we want to be.
Cool, thank you.
We're drawing to a close, I'm sad to say. But Alex, if you could give us a key takeaway, what would be one piece of advice you could give to small business owners?
Every now and again, just try and step out from working in your business and try and work on your business. So we've spoken a lot about budgets and key performance indicators and cash flow. And I think you miss those things when you're in the day-to-day, when you're doing the job, and you wear a lot of hats as a business owner, as an entrepreneur, but try and take some of those off and look at it from a purely business owner perspective and make decisions about your business from kind of a little bit outside of it, rather than just staying busy and getting in it.
And what would you say is the most common mistake that you see business owners make?
I think not engaging with these kind of things. So, not worrying about what their finances look like and kind of going, well, it will come, and not engaging in what's coming down the line. And they just get really busy in what they're doing right now. And I think that's really important. And during times, that's what's going to get you out of sticky situations. But stepping back and looking at what's going on in and around your business is just as important as what's going on directly in it right now.
100% agree. I think the finance is the backbone of your business. So it is super important to get it right. Look, we've really enjoyed chatting. Thanks so much for your time, Alex. If anyone has any questions, drop them in the comments, and don't forget to give us a like and share.
Yeah, and if you do want more advice around Xero, Sift, or the parameters of any of the softwares, just drop us a message, give us a call, and we'll be happy to help out.
Thanks for having me, guys.
We figured it out.